I think the biggest challenge with the backdrop is the fact that our end investors are really spoiled for choice when it comes to yield in fixed income. So when you look at the flows, there have been really no flows into this asset class. There have been no flows into things like high yield. There just hasn't been a sense that you really need to move down the credit curve. All the flows are going to money market funds, also to investment grade funds, and realistically, I don't see that changing in the near term. We have to prepare for perhaps a more benign environment, maybe into 2024. At least I'm being hopeful in that regard. But I guess how it affects my day-to-day investments, a lot of our capital, when we look at Asia these days, is allocated to local currency. And for us, it's really a consideration of rate cutting cycles, and also the carry and the currency exposure as well. And there we still remain fairly constructive, despite the fact that we don't know, when, if the Fed is indeed finished. Clearly, there's risk that they have more to do because of just the resilience of the U.S. economy and the labor markets. But ultimately, we don't think it's going to stop the rate cutting cycles from occurring. We've already seen rate cutting cycles begin in Latin America, certain EMEA countries as well. And we think the roster of rate cutters is only going to increase as we go into the end of this year and into the beginning of next year. And sure, in the short term, it could complicate the picture. We have other pressures such as El Nino, which is complicating the picture perhaps for India to consider cutting rates, or the Philippines, where we have a new governor who's become a bit more hawkish. But for us, we're not short-term players. We're patient. We're long-term real money investors. So if the rate cutting cycle gets delayed 3 months, so be it. We do think that there is reason to continue to believe that these rate cuts are coming. Really taking away a lot of the rate cuts that were put in place in the aftermath of COVID and also during the cost of living crisis. So, despite the fact that there are very limited flows coming to the asset class, fundamentally speaking, we do think that there are good reasons to continue to own duration in local markets, not just in Asia, but also other emerging markets.